Hello, everybody. Okay, today what we're going to do is we're only going to use QuickBooks, and we'll show you various features. If anybody has any questions, please come online. Okay, so over here, let me go back to this center over here. I created a new company called BizWax2, and what happened is BizWax2. The company's snapshot. This is the company's snapshot. The company is what I would call a consulting company in the computer industry. Right now, I have two vendors in it. Two vendors are, here's the vendors. One is AB Renters. They rent the space to the company. The other is IBM. They provide the computers that the company uses. It's a very small company, but I'm showing the ideas for you to understand what's going on. Okay, so over here we have the company, the vendor center. Let's go back to the main thing. So normally in QuickBooks, we use this roadmap over here. We have the estimates, we create invoices, receive payments. Then the banking, we do record payments. We enter bills, we pay bills. We have statements and charges, statements, you see over here, and employees we enter time. So what I'm going to do today is actually run through all four of these scenarios over here, the vendors, the customers, the employees, the time, et cetera, to show you how these things work, because that's some of the people have questions about that, and so we can see all those things as we go along. Okay, any questions? Okay. So first of all, over here, what we're going to do is we have vendors. Again, the vendors I showed you, we have the active vendors. We have transaction on the vendors. So we'll actually make a new transaction. So a vendor will enter a bill. Okay, discard the changes. And now we're going to enter a bill. This bill is for company. And we're going to say that the bill is for $500. $2,000. And then we'll say save and close. It warned me that's for 90 days. I'm doing this in the past. Okay, so let me go first. I'll get a vendor. Let me start by getting a vendor. Okay, the vendors. And here's my vendor, AB Renters. And AB Renters is the company that rents the space for us. I entered the data already. So now I'm in AB Renters, and I say, let's make a new transaction. Give me back to vendors. The renters, and I say, let's make a new transaction. Enter a bill. So now here's AB Renters. I say that and make it from the January 1st. That's the bill for the rent. And we'll say the bill for the rent is $2,500. And I save and close. So there's complaining over here about an account. Let me make this small again. Okay, let me stop that. Share. Okay, it wants me to enter an account, so let me close this. Okay, so there's the vendor. And the vendor has the idea, that's the vendor here. Then we have the account number. Say it's number 1. And the account is be filled with what we call that over there, the utilities account, is expense. So now we have an account. And now we can enter the transaction for bill. Okay, save changes. $500, $225 again. And then now we have the bill. So forget about the first bill. And now what I'm going to do is I'm going to enter bills for the first 4 months of the year. And the second one will be on the second month. And again, it will be $2,500. And now we have a second bill. It's complaining it might be before 90 days. What happened was the vendor went away, so let me get back to the vendor. So now, okay, now I can do it because I'm in the vendor. And now we have a second bill. Let me change it because I made it it's on the second. Now make another one for the third. New date. And you see the date automatically moves. And this will be for $2,500 also. And now for the fourth month, also $2,500. What happened was it went out of the vendor. Clear that. Okay, the vendor, that's what happened. It moves out of the vendor. Okay, again, the fourth month. And I say it's again $2,500. There's the fourth month, and we'll do the fifth month. And then we have, so now we have two on the fourth. Let me change that. So you can edit the transaction and correct it. Make that on the third, not on Shabbos. Save and close. Okay, so now what we have over here is we have the first, second, third, fourth, and fifth month. I made a mistake in the first, so let me. Okay. So now we have, if I close this, we now have a whole bunch of bills, and now what we can do is we can pay the bills. Okay. So now what we have over here is we have a record of the bills, and I said originally when I set up this account that the account had $100,000, to start off the company. So now what I'm going to do is I say, take the first bill, and I'm going to say, pay that bill. I left. Okay, so I pay that bill, and now I can say, pay more bills. I pay the second bill. What I did over here, Actually, the question. Okay. I will see. And, the question is the way to create an annual chart instead of inputting every month. You can do that. That's more advanced. I'm doing just the simple way of doing it right now. Okay. So now I say I'm going to pay two bills at the same time. Pay the selected bills. And what I'm okay, I paid the bill. And now pay the last two bills. You pay selected bills. And you can delete a bill by mistake. I'm not doing that right now. Okay, so now it's done. And you see over here, QuickBooks. Remember, I said that QuickBooks actually will send you checks that you can print on. Over here it says, print the checks. I'm not going to do that right now because I'm not going to have a printer attached to my computer. But you can print the checks also. But I will pretend over here that I'm writing the checks. So what I've done over here is I've entered bills and I paid the bills. So that's one vendor. Okay. So now what I'll just show over here. So that's the bill section. Any question on the bill section? So that's the idea. On the top row, we have vendors. We create the vendors. We enter the bills, and we pay the bills. Okay. So now we have the customers. So let us say customer center, and we'll say new customer and a job. So the customer's name we'll say is the OU, and the opening balance was 0, and we'll say that started on also January 1st. Okay, the customer is the OU, Mr. Tom Jones. I'm just making it simple, leaving out all the contact information. Okay, so here is the customer. Okay, the customer, the OU, the question, what happens when you pay the bills? There are two questions over here. Why checks not paid online? That's a good question. Ellen Frank will answer that question. QuickBooks also has the ability to pay things online. QuickBooks has numerous ways of doing it. The easiest way to do it is to write checks yourself. The next easiest way is for QuickBooks to actually print the checks. And the other way to do it is to actually have an online payment system that you can set up. Okay, what happens when you pay the bills? Again, that's the same over here. Is either you write the checks yourself, you have QuickBooks write the checks for you, or you actually go online and actually have the bill paid like that. So I think that answers the question. So now we have the customers. So we say the OU, Mr. Tom Jones, is there. That's the customer. And over here it says manage your customer online. That's the same idea over here. That you can actually receive the payments from the customer online. Okay, so now we have transactions, new transactions. So first of all, that's right. If you, I'll do that next week. There's a very interesting question that's getting asked about setting this up with PayPal. I don't have that ready, but I have to get another module for that. I've done work with PayPal myself before. And also, Abigail DeVera's question, if you write the check yourself, you are responsible for mailing it, correct. And if you have QuickBooks writing the check, you're responsible for stuffing in the envelope and also mail it. The nice thing about it, if you have QuickBooks, then QuickBooks actually will sell you the envelopes. They won't sell you the stamps. They'll sell you the envelopes, the nice plastic envelopes and everything for you to do it. So then it actually works like that. So again, I wrote that down. The next week we'll actually have an example of using PayPal. Maybe I'll actually set up PayPal to make a very small little donation. Okay. So now over here we have an estimate. So we'll say the estimate is new service. Item 1. It's called computer service. And the rate is going to be like $50 an hour. And we have to have an account. And the account will be the consulting income. Okay. So that's an estimate that we have over here. The consulting, we'll make it a little bit bigger. So the total will be $500. Okay, so that's more than, okay, so we have an estimate. And again, as I said, I wrote down for PayPal next time. Okay, now we'll have the transaction. We'll say that we actually did some work based on an estimate. Now we write an invoice. And the customer job is the OU. And we have a $500 transaction that was done on the we'll make it on the first of the month. I'll change the date a little bit. We'll say it was done on the last day of the month. It was finished. So this job was done on the last day of the month. We'll say item computer service is done for $500. Not 5,000, so we'll make it 550. It's not over 90 days. So there we have the idea that we had one job done for the OU from our company. It's now 137 days old. We have an amount of 550 and an open balance of 550. You see the aging. I'm not using the aging right now. Maybe I'll show that next week. In business language, this is not a question of halacha, but this is a question of business. Very often you give discounts when people pay things, in a timely basis. Over here, or when people don't pay on a timely basis, there may be penalties. So over here we have an idea. We have an invoice over there. Okay, let's make another customer. We'll say we're doing computer service for them. So the customer name is Dr. Smith. I'm making small names. Opening balance also 0 on the 1st of January. His name is Smith Medical. Okay, we have another customer, Mr. Smith, Dr. Smith. What we'll do over here, we'll also make one other invoice to the OU. We'll say invoice 2, then on March 31st, we also repeated that, computer service, for another $550. And save and close. So now we have the OU. The OU has actually, we have $1,100 over there. And now we'll go to Dr. Smith. Here we are, Dr. Smith. So we'll have a transaction against Dr. Smith. We'll say that on February 15th, he had a service, a computer service. And the computer service for Dr. Smith came out to $2,500. He sold him a computer and a few other things. So it would make $2,050. So there, let me change the date. We'll say that the date is March 15th. Now we'll save and close. We'll ask if I want to change it. So this is the idea. This is the idea over here. Over here, I showed you that we have custody. We showed you first the billing. First showed you the vendors, and now we're showing the billing. What I'll do is I'll enter another invoice for Dr. Smith. Dr. Smith. Should I close that? Okay, and I want to have another transaction for Dr. Smith. Okay, and the item again is computer service, and this time will be $4,000. Make it 4050. Save and close. So now over here, we show that the company has $7,200 of invoices out. Okay, so that's $7,200 invoices out, and we'll compare that to the bills that we don't have any bills outstanding, but the bills actually were a little bit greater than that. Okay, so we'll discuss that a little bit later. So the idea is this is the way that the companies are entering bills, paying bills. I showed you the estimates, and now we'll show you receive the payments. Close that. Okay, so we'll say received from Dr. Smith. Amount, and we see he has two bills. So he has one bill was on 1/15 for $4,500. The other bill was on 3/15 for $2,500. So we'll say, first of all, we'll say he paid $4,000. That's $4,000. And now the question was, how did he do it? We haven't set up credit cards yet, or PayPal yet, so we'll work on it next week. But over here we'll say, for instance, that he gave a check. A memo, okay, the check was was a big payment. The check was number 4501. There's no credits. And now you see, this is an interesting thing over here. Like in real business, we say leave this as an underpayment, but since we're a friend of Dr. Smith, we'll say write off the extra amount, and we'll eat it ourselves. Okay? So that's a nice thing that QuickBooks allows you to do. Save and close it. So the first bill is paid. And write it off to, I'll say, to professional fees. So we paid. So we got an invoice and received the payment. So we wrote off the difference to our professional fees for that company. So now You see, QuickBooks is telling you over here that the payments that you see, that's the question like you asked. You said checks, debit cards, credit cards, gift cards, cash, wire transfers. So that's the payments that we'll see, but we won't go into that right now. Okay. So now, we'll say that Dr. Smith had a second payment. And he owes us $20.50. This time he's going to pay the whole $20.50. And since the bill was on 3/15, we'll say the bill was paid on 4/1 or 4/15. So here the bill was paid. Save and close. And so the bill was paid. Okay, so now we have still, close that again. You see, it constantly asks me about, what other services I want to get. So now the OU still owes us money. So the OU owes us 2 payments of $5.50. So I'll say auto apply payment. So what happened, QuickBooks automatically knows how much the payment was, and so that's the payment, save and close. So now the payments are successfully saved and closed. So now what we've shown over here is that we have bills. So a good question, Abigail. Auto apply says I have a invoice. So when the payment is applied, I automatically apply the money, and I don't even have to type it in. That's what auto apply means. So I just have to set the payment, auto apply, and then automatically I know that the person paid the whole thing, and it just flows right in. Okay, so as a professional organization, we have invoices and receive payments. Another way, these are invoices. That's another way of looking at it. This is over here, statement charge. This is a little report. Remember I said we're going to do a report. This is a report of Dr. Smith's account. He has an invoice, payments. This is a report on Dr. Smith's activities. And this is what's called a quick report. With that name. So we'll do this a bit later. But when we over here, that's Dr. Smith's report. And here is the OU's report. And the nice thing about the way I set this up over here is that the OU and Dr. Smith's accounts both balance. Which, in the real world, that doesn't happen sometimes. Okay, so that's the idea. Okay, so that's the idea of the statement of charges and the idea over here. Okay, so what we've done over here so far is we've shown the idea of vendors with entering bills, paying bills, estimates, creating invoices, receive payments, statement charges. Okay, now, one other thing on this line before we go to the next line. What happens if you have invoices and somebody says, you know what, you paid too much, or you got a credit because something happened over here. So over here we have a miscellaneous for refunds and credits. So for our customer, we have a credit memo. So this will be here to Dr. Smith, to the OU. We said that computer service, we have a description, we have a refund of $100 that we're giving to you. So that's a refund that we can give them. Let's say they overpaid us. So the idea is return it as available credit or give us a refund. So I'm giving them as a refund. and say to be printed, and then we will mail it to them. Okay, so that's the idea over here. We showed you all these boxes as they work. Enter bills, pay bills, estimates. Okay, also I didn't write down over here, but particularly people who work in business, this is the idea of creating a sales receipt. When you receive the payment, you can create a sales receipt, and that can only be done by QuickBooks. So in fact, show you that. So, again, he wants to sell me some services. So over here, a sales receipt, we can say is that the customer, job was Dr. Smith, and then the check that he had, et cetera, et cetera. This is a custom sales receipt that we're making for him. Custom messages, thank you. All work is complete. It's a pleasure working with you. Please submit to Bavarian. Thank you for your business. Appreciate your payment. Everything else like that. Process clear code when saving, et cetera, et cetera. So this is the idea of setting it up as a sales receipt also. Okay. I don't want to record that right now, but that's the idea. So I show you over here all these boxes at the same time. Any questions about this? So what I've showed you is this can be done in all sorts of businesses. In professional services, again, bills and pay bills, estimates, create invoices, receive payments, statement charges and statements, refunds and credits. Okay. The last thing that I'll show you over here before we go into some of the other ones is the big thing. I was experimenting with this before, I'm using it, is actually the idea of employees. So far in this company, we have a bank account, we have bills, pay bills, we have estimates, invoices, statement charges, et cetera, and now we're going to enter employees. So we're going to create a new employee. Okay. Make it a little older. Okay, that's old enough. Okay. This will make a little content. Contacts, New York. Not North Carolina, New York. Okay. Account number of employee. Here's our number one account. And now, remember I said last week, QuickBooks allows you to do it in 3 different ways. So what we're going to do over here, we're going to do it our own way. So what we have over here is that, number one, we say, what's that payroll schedule? And we'll say that the payroll is bi-weekly, every other week. And we'll go back to the beginning of the year. The first payroll period ends on the 15th. And when it comes out on the 15th, that's the first every 2 weeks. It should be dated as the 15th. You pay your employees after pay in the thing. So that's the idea. That's called the payroll schedule. Okay, this is correct. So now we have a schedule. So now what we're doing is we're going to enter the hourly rate. We'll say that this person gets paid $45 an hour. No, it's the annual one. so like the annual salary will be $80,000. Yes, and so that's regular pay. Regular pay. Employee salary. Payroll expenses finished. It will say that the salary, anything that should be there, but not bi-weekly end. Bi-weekly? Not bi-weekly end. Okay. And then the use time, okay. And then we'll say the employee is also covered by a qualified pension plan. Okay. And then okay. So that's the idea of setting up an employee. And now, um, um, as said before, you don't have to have each check cut individually. All the checks now will be sent to this person automatically. If the address is correct, okay. Now we got it set up correctly. Bi-weekly, everything's not nice over there. Now we have taxes. And so we say that this person is single. Parents say single. He pays Medicare and Social Security. Federal unemployed tax, the company pays that. And now that's federal. New York. Say goes to withholding. We have the withholding. State subject is withholding, yes. State is New York. And then other payments are made. Continue. And so the idea is that's the paychecks for the unemployment state, for the unemployment payments. Okay, so and company tax rates over there. This is for the unemployment state. So this is all now set up. Employee salary, finish. You now have set up a payroll thing, and so that's you can track the amount to pay in the payroll center, and that's over there. So that's been done. So now we're finished. So finish. Company tax rate is 4.5% for unemployment, and finish. Taxes paid by the company. They'll pay the liability. Okay, and finish. Okay, and the taxes is over there, and it's all done. Okay, so over here we set up the schedule for a person to pay for New York and all those other nice things over there. The $80,000 salary is paid bi-weekly, and the checks will automatically be cut. So that's the salary. So over here, what we've done over here, just reviewing this, we set up the idea of, and over here we didn't set up time. We set up an annual way. So that's one way of doing it. I'll show you another way. So that's Mr. Horace Morgan. We have another employee. We'll say this is Ms. Over here. Miss Alice Jones. Social Security number 2222-11333. Sender 03. And I will say, this person won't have it's also biweekly. And we'll say this person now has a $25 annual weekly rate. And then we'll say that, again, the state and over here. So over here, and then we'll also, in this particular case, we'll say this person has direct server is not working, so we'll forget about that right now. So over here, then we have the separate person for weekly pay. So over here, what we've done today is that we showed all these things on the main board. So first of all, before I go further, are any questions about this? Again, we don't have to show or learn about payroll options because we had a lot about that next week. But over here, we showed every single main board that we had over here. The top row, the vendors, entering bills, paying bills. sales receipts, estimates, created receipts, statements, etc. Credits, enter time, learn about payroll. Okay, entering time I skipped over. Let your employees enter time. So to do this, I'm not doing this right now. This is one of QuickBooks time trackers. Remember, the first employee that we had, Mr. Horatio, actually had an annual salary. The second employee, Ms. Jones, actually had an hour. So over there, you download QuickBooks Time Tracker. You have to buy it, free 30-day trial, and this will allow the people to actually enter the hours themselves. So that's about entering hours, and you see over here, I hinted at that this previous weeks that actually could do that. Any questions about anything that I showed you over here? So this is the main. Screen of QuickBooks with this three and a half lines going across the thing. Very simple screen to work with, and in fact, it's very logical, and all the things flow very nicely. Any questions about this? Okay, so the next thing we'll show you is about reports. Because one of the things that we see over here, this one, if we go to banking, so we see over here, if you have any, the beginning balance is $100,000. That was the main investment over there. And so what we can do is, in this case, is we can begin reconciliation. So the idea of reconciliation is that we can show, so just continue over here 1 second. Remember I said that our main account had $87,500. So then, what happened is, we got the following checks. So the following checks were from the AB renters were 3 checks, and the OU sent us for that check. So the main thing is, when we do the reconciling, I don't have the checkbook in front of me, but we can say over here, we see that that check was made. Next one, the next one, and the next one, that was all done. So that was all done, and there was no differences. And so over there in the reconciling is we actually go to the main account, and we see, for instance, that there was a difference between $87,500, $87,400. That was the $100 bonus that we gave back to the vendor when we wanted to, that was the $100 credit that we gave back to the other person. So that's where that extra $100 goes. So the idea, books talk about that there are many different ways in figuring out how to reconcile checks. Sometimes when you have checks, let's say you have $100 over, so you have to go through your register and you find out what $100 was in my whole account that could actually tell me $100 over. So this is very simple today, because remember just a while ago we actually had $100 as a discount, so that $100 discount shows up over here as the $100 that's missing over here. So that's the idea of reconciling. We'll do more about this next week, but this is the idea of reconciling it. And what I'll do is I'll take this program over here and I'll develop it even more and show more details about this even next week, including the PayPal stuff. Okay, so that is the simple idea of reconciling it. In reconciling it, very important, the banking functions. banking functions, and as we said before, not only this is very elemental, but over here is writing checks, ordering checks in envelopes, as I said before, entering credit card charges. So if your company accepts credit cards, that's how it goes over there. And entering credit card charges, I'll show you a little bit next year. I wrote it down also. Because credit cards, you have to figure out also the discounts that are different than cash, and that's entered credit card charges. Okay. Use the register, make deposits, transfer funds. So again, as I said before, you don't have to do checks all the time. QuickBooks can be set up to transfer the funds to your customer, to your vendors. So you can transfer it online, like I said before. Online manager, set up account for online services, participating in financial institutions, learn about online payments, so that the different services, loan manager, and other names list. Okay, so that's the bank. So, and then the employee center I showed you, the vendor center I showed you, the customer center I showed you, and then very interesting. This is the customer. This is the customer. This is customer snapshot. It shows the income on top. The beginning months of the year, we had more income than expenses. The middle month, March, we had a little bit more. April, May, didn't add any income yet. It shows over here the reminders that we have $12,600 of checks to print. I said we wrote them all. Then the invoices were $7,500. We had $7,150 to deposit. And then, very interesting over here. This is going to the IRS now. I incorporated this fictional company as what's called an LLC. That's a single owned limited liability corporation. So the single limited liability corporation has two choices. Has one good choice and one bad choice. The good choice is actually to make estimated tax payments as you go along. So during the year, as the company actually makes money, hopefully this BizWax 2 company makes some money. So what happened is they actually then transfer the funds to the federal government, and they say over here that's an alert that QuickBooks said to me. So they said that it's important for you to go study the IRS and understand how the IRS will accept their estimated payments. So this is a company snapshot. So we see over here the account balances, no customers owe us money, no vendors there are no open bills, so everything is, from that aspect looks good. The only thing is we haven't made enough money to offset our expenses. That's a different thing which we'll go over next week. Again, we have our payroll. So the servers that are currently unavailable, that's the QuickBooks payroll, so we don't have to show them right now. And then we show the money deposit, the check. So that's called the customer snapshot. And so what you can do with a customer, you can actually look on QuickBooks, and QuickBooks will instantly tell you, what your company looks like. The income and expense trend, the account balances, customers owe us money, vendors to pay. And again, since we didn't add any income for February, March, April, May, we don't see too much money in there. We can change that next week and update that a little bit more. And we'll go into credit cards and pay. We'll go into credit cards and PayPal again next week. So that's the company snapshot. Company snapshot is the highest level chart, and it shows you exactly what's happening in the company. Okay, so again. again, over here we show you the view of the whole company, the company snapshot, the banking. And now we'll go into the nice detail called the report center. Okay, this is a very detailed set of things. I hope we'll be able to do a lot of them. So the first one we'll do is the standard. It shows us on an accrual basis at 2:25 p.m., that's today, that the net income over the last, from June 1st to then, not from June 1st, we actually do from the beginning of the year. Because we did have income. So the income was zero because we didn't have any income over the expenses. Another way of looking at it is the cash base of the company. It shows that the consulting income was $7,100 over the past year. The total expenses were $12,500. The net income was $5,450. So that shows that's the profit and loss of the whole company. Unfortunately, during the first 6 months of this company, we actually had a $5,450 loss, unfortunately, for this company. Okay. This is only theoretical, but this shows you the power of QuickBooks of what it can actually do. So that's the first report. So you can actually save it, but I won't cancel that. Okay. So now we have a detailed report. The detailed report shows us the consulting income that we had from Dr. Smith and the OU, the refund we gave, that's the whole big detail, the total professional expenses, we got the big payment there, the utility bills that we had to pay to AB renters. So this is a detailed picture of everything that's happening in our company. So that's so then it shows, again, it says the $5,450 net ordinary income. Just a second. We don't have any we have a year-to-date comparison. We don't have any previous years. Very nice. I don't know how many of you have used TurboTax. How many use TurboTax? I don't see any answers. Yeah. So TurboTax, I know, I've been using TurboTax for many years. So TurboTax actually shows my family exactly the trends that we have of things go up or down over the years. So that's what so over here. They'll be able to give you BizWax 2 actually can have profit and loss year-to-date comparison. The previous year comparison, we don't have it. My job, how much money are we making, losing on each job? So this is the consulting income they have Dr. Smith. Over there we have total gross profit. We did not assign the workers to the company. When we assign the workers, that goes down a little bit. We'll show more of that next week. I just wanted to give you a complete overview of everything that's happening in the thing. Then we have by class, consulting, expenses, professional fees, utilities, total expense, ordinary income. Okay. So that's that. And on classified, we don't have any of that. That happens if you have money which is just, I don't want to say floating loose, but money which is not tied to any class and just expenses over there. So those are the first profit and loss statements that we have over there. And then we have income by customer summary. So that's the two customers that we have, Dr. Smith and OU. $7,500. And in fact, we can change it. I'll change it briefly by just getting another customer. We'll say the customer name is Dr. Hoffman. Opening balance 0 at the beginning of the year. Didn't owe us any money. This happens to be the name of a friend of mine, Dr. Anthony Hoffman. So now, I'll say that Dr. Hoffman, if I say computer services, later in the year, we'll say that in May he became a new customer. So in May we actually had a $6,500.50 item. So now we'll go back to Report Center. So now we see that we have a different picture. We have an invoice that we have invoiced them, but we haven't collected yet. So now we see that we have income, larger income than before, because we have Dr. Hoffman's thing there. We haven't yet collected it, but that's a different story. And now we have income by customer. Now we see Dr. Hoffman, Dr. Smith, OU. Income by customer detail. We have an invoice, but unfortunately we have a balance for him because it hasn't been collected yet. And that's the idea over here. That's the balance that we have over there in the account. Expense by vendor. That's just AB renters. Expense by vendor detail. Those are all the bills that AB Utilities has made. An income expense graph. The expense is actually entirely the AB renters and a little $50 for that expense that we gave back by account. The dates, etc. So that's our business over here. Okay. No. Abigail asked a question about auto apply to work. Does the customer's bank info have to enter in QuickBooks? Two ways. Number one, if we're doing a direct payment, then the bank has to be entered. Otherwise, we're cutting checks. So that's the difference. Okay, now we have the standard. Now going down in the charts, there's a whole ton of charts. The balance sheet. So where's the balance sheet work? It says over here that the checking account has $87,400. That was after we spent all the money. We have accounts receivable of $65,550. Other undeposited funds, I didn't write that in deposit. The funds, 101,000. Total liabilities and equity, 101,000. That's how it's equal. I didn't mark. Then we go to the bank, and I forgot to do something. Over here, we have our payments. And now I'll deposit them all. I forgot to do that before. And the cash goes back to the main account. Just set up differently. So I did the deposits. And now we go to the report center and look at it. This is slightly different because we've deposited things and there's no outstanding deposits. So then the detail of the balance sheet. Here's a detail which says that the current assets are $101,000, $94,000 the main account, and then we have the outstanding thing. So what we've done over here is that we started with $100,000 at the beginning of the year, and now we have $101,500 at the end of the year. Okay, so by adding this one different account over here, this is again I said theoretical. Over here we were able to then ratchet up the account and add another $2 to actually make it work. Okay, so that's the balance sheet. Summary. Again, the current assets, that's $101,100. The per year comparison we don't have. The net worth shows month by month with the big account that we had over there, the expenses, those are liabilities. The net worth is that it went up by this very small amount over the year. Again, this is only theoretical. The statement of cash flows shows the net income, how much cash went out, how much cash went in, and that's the cash at the end of the period. We started $100,000, we now have $94,550, and then we have then again the $6,500 of accounts receivable. And then the cash flow forecast shows that right now we expect in our bank account we have $94,550, and we expect an accounts receivable of $65.50. Expecting the accounts receivable, then QuickBooks can actually get into the act and send dunning letters and things like that to actually make sure that that bill is paid. Okay. And then related report is what the accountant sees. Remember, I said that. Excuse me a second. I said before that the accountant sees the QuickBooks. So the accountant may try to make a trial balance for your company, show you the debit, credit, the opening balance, equity, consulting income, professional fees, et cetera. And then the general ledger, which has everything written down in all of the things. We haven't added everything in yet. And then we have the journal, which has from the beginning of the year we have the whole year journals, the expenses, the income, etc., the refund, etc. So that's the journal of everything that happened in the company. trail. So this is everything that's happened in the company. So then the accountant can actually go through line by line and see all the details that's happening in the company. The voided deleted trail, we didn't have any things voided deleted. But remember, I had one invoice, I think, or a bill that I can void. Let's get back to this 1 second. Yeah. Here was a bill for $0. In this case, I don't think you can void it. I think what you can do is you can void invoices. Yeah, I remember doing that. So I'll go to the customer center. I'll make a new transaction. And then yeah, over here on the customer, on the create invoice, there is a thing to delete the invoice or to duplicate the invoice. So in this particular case, I'll say delete the invoice. Remember doing this once. Do you want to delete this transaction? Okay, it's deleted. So now, on that last report that I had, now it says here that I added a transaction on the date of 5/19 for Dr. Hoffman, and at 6/17/2010, 14:41:58, that's today, I deleted it. So that's very important when you're going through the audit trail to actually see the deleted transactions. So the accountant picks this up and they'll ask you, what's going on over here? Why did this thing actually fall out of the system? So explain to them that we made a mistake and we sent them an invoice by accident. We duplicated something. So that particular case is over there, that's the void deleted transaction. Close that. Okay, that's voided. Transaction list by date. Those are transactions, so we'll see the transactions from the beginning of the year. This is similar to the audit trail. So those are all of the transactions that we had during the year. The deposits, the splits, everything else like that. Okay. The account listing. We're not using all these accounts that we have over here. We have the main account. We have the accounts receivable. We have the opening balance equity, which we're using. And then the cost of sale. Particular thing, so that's that. Particular thing which we'll drill down next week, and I will just mention it a little bit now, is the automobile expense. I'll discuss that briefly in a second. But automobile expense is a very important thing. The federal government gives you mileage estimates per mile. So when a business associate of your company actually drives to the company, that becomes an expense. And the upkeep of the car, that actually becomes an expense that you actually can pass back to your customers. So that's the automobile expense. We'll see more about that next week. I'm writing down a few things to discuss next week. The most interesting one has been PayPal. Okay, so that's that report. Fixed assets, we'll see that also next week. That's very, very interesting. With the fixed assets, let us say, a very interesting business, for instance, as follows. Let us say you're a gym, And the gym actually has machines. Some of those machines can be extremely expensive. I remember I worked for IBM for many years, and IBM had these. For instance, I have a treadmill at home which cost me $450. IBM's treadmill was this big metal monster which cost about $3,500. So when you have a fixed asset, you then have a lot of stuff with the depreciation. Depreciation is a very big topic which we'll also do next week. Depreciation is very important in fixed assets because when you have your fixed assets, you install them once, and then during the year, the federal government allows you to depreciate the assets as if it's falling apart over the years. I know when I do my own taxes, I use TurboTax, and then what happened is the computers that I have, the fax machines that I have, the telephones that I have, et cetera, you put them into TurboTax, and then you depreciate them over the years. So those are fixed assets, now you depreciate them. An income tax, a summary, et cetera, et cetera. So what I've shown you over here, reports, company and financial, job, time, vendors, employees, banking, et cetera, budgets, and a whole bunch of stuff like that. Okay. So we'll now review a few things which are very important over the time period. So again, over here we have the big picture of what they have over here. Okay, so we've done, I would say, 90% of the left side. Also over here, another. Can I move this? Okay. We have the chart of accounts. The chart of accounts are all the things that we have over here. Those are the various parts of the account, main account. And then we have the items and services. And the items and services include create invoices, enter sales to change item prices. And over here, again, duplicate item and finance and transactions. And again, remember before, somebody asked me questions, I knew this, I just had to find the right place. When you have a transaction, for instance, you have a bill that you send out every month, you can actually duplicate the bill over and again. So if you create one bill for rent, you can duplicate it 12 times for the rest of the year. Okay, so that's the items and services. Very important. We have a check register when we have checks. And again, as I said before, we can print out checks. And then reconcile will actually populate this company a little bit more and reconcile it to a much deeper level next week. Okay, so again, I wrote down reconciling deeper. I wrote down PayPal deeper. And I wrote down using the order mail a little bit more deeper. Does anybody have any other questions that they want to raise at this time? Let me move this back. Does anybody else have any questions? Okay, I'll try to speak a little bit louder. Okay. Okay, so now, again, for next week, if there's any other particular things that you want to discuss with me, please send me an email. A few students have sent me an email, and it's been very helpful in running this course. Also, I want to just finish the last thing over here by actually discussing a little bit about the checks. Just reviewing over here, writing checks, is that we write checks for an expense that have not been entered as a bill in QuickBooks to record a cash transaction. So that's writing the checks. And then printing the checks, very interesting thing. that review checks and the paychecks that have been recorded for QuickBooks is like the checks you want to print. So again, we have the standard checks that we're printing for the customers, and then the other sorts of checks that we're printing out are the payroll checks that we're printing out to our payroll payroll vendor, payroll. Okay. One thing also very important to mention at this time, and I think I mentioned, I just want to review it. In the United States, employees come in two main guises. One guise is called an employee. An employee may be paid hourly, may be paid on a salary on a yearly basis, but the main thing is that that employee is called a W-2 employee. The W-2 employee gets a salary, pays income tax, and then actually then does the thing as a regular employee that most people are familiar with. The other type of employee is called a consultant. And a consultant has an official name for in the business world. The consultant is paid on what's called a 1099. No taxes are taken out by the consultant from the pay. The consultant gets a net fee. The consultant, such as myself, then is responsible for paying the taxes on that amount. And as I said before, a good idea for the consultant is that limited liability corporation is to actually pay the taxes estimated as they go along the year, not to accumulate them at the very end. So that's a very important thing about employees. Employees are both 1099 or 1099 or W-2. Okay. Another thing which is very important about employees is that employees employees also can have the checks deposited directly. Just as we have online services for receiving payments and for receiving payments and for sending items out, we can also have checks deposited directly into the employee's account. In doing that, then QuickBooks should actually schedule that, and then it actually just leaves QuickBooks directly go into their account. You have to have their banking information, and it flows directly from the QuickBooks into their account. So that's another very important thing. So, okay. So, are there any questions that you have? I don't see any hands coming up. Okay. Again, my email address, just repeat again. That's my email address. My email address. swhandel@gmail.com is my email address. Okay, if there's any other questions, please do that right now. So just a few. One thing about, are you all familiar with PayPal? So I asked the question, nobody answered. Okay. Okay. So PayPal, okay, so just review this for those who are not familiar with it. PayPal is a service that you can actually directly get paid for. You have the following problem. When the internet came out, people were very concerned about credit cards floating around the internet and things like that. So an organization, PayPal, says, you know what? The credit card information, everything is hidden by us. You don't have to send it out. You just register your credit card or your bank account by PayPal. PayPal does the transferring for you. Or the company pays for it. You don't pay for it yourself. And what happens is automatically the money flows from your account or your credit card directly to the other company without anything else happening. Just passwords have to be sent, and it works beautifully. That's also shared by by Google. Google also has Google Payments. This is a very important service that's happening on the internet, and in fact, PayPal was so popular that eBay bought it. And so if you buy things on eBay, you find that most of the things are actually done by PayPal. So it's a very interesting thing, and it was a very good question about how does, look it up and try to answer that next week. How does PayPal interface into QuickBooks? Okay, are there any other questions? So the main thing is I thank you all for participating today. I hope this was clear. I hope we went through all these functions. These functions are deep in their knowledge. Again, next week I'll go more into PayPal, digging down into reconciling a little bit deeper as I put more into into the account, and we'll see further as we go on in 2 more weeks. Okay, any other questions? Please respond to my by email. I try to answer the email promptly. If you have a phone call that you want to make, send me the phone number, and I can call you back promptly. No problem. Okay, so again, thank you very much for attending today, and hopefully you've learned a lot about QuickBooks and how it's functioning. Okay, very good. Okay, thank you very much, and be well. Okay, bye-bye.